right, this one came in from Lloyd in Georgia. I've been talking to a lady on TikTok, and she was telling me about investing in Bitcoin. Her name is Charlotte, and she is asking me, well, he did the last name, asking me to send her $300, and she'll invest it for me in Bitcoin. My wife says it's a scam and says they're just going to take my money. I just want your take on this. If you were going to invest in Bitcoin, how would you do it?
Well, Lloyd, I certainly wouldn't do this, and your wife is right. This is totally bogus. This is a classic, typical Bitcoin scam thing, and don't talk to Charlotte anymore, which is probably not even her real name. I would stay away from it. Just block this person. If you do want to invest in Bitcoin, it is getting easier to invest on your own through recognized exchanges. I'm not a big fan of crypto or Bitcoin, so you don't hear me talk about it. Crypto, the idea, the underlying thing of Bitcoin is something that so far has not matured to a point that I see it as something to recommend. The idea of electronic bookkeeping is essentially part of what it's about. That is something that's definitely part of our future. But at this point, crypto is still a very high-risk speculation. Even Bitcoin, even though people can show me how it's gone from this to that, it's still not investing. It is not an investment, even today.
Jason in Florida says, can you offer an opinion on GoodToGo Mobile's $60 per year for talk, text, and 1 gig of data?
So GoodToGo is not a company that we have reviewed. We do deep reviews on various smaller cell phone carriers, what are known as MVNOs. Mobile virtual network operators, which means they buy wholesale capacity from other companies and then they market their own cell phone service. If you look online, the reviews of GoodToGo are very mixed. There are others that charge an equivalent $5 to $10 a month, $60 to $120 a year, with a modest amount of data involved. And we have reviews of some of those at Clark.com. I tried one of these $5 a month ones for a while, and the review of that is on Clark.com, and I found them. I had no problems at all and haven't been able to find records of problems, and we have that review for you at Clark.com. But what's significant, I want you to think about this. This is a cell phone provider charging per year what Verizon, AT&T Mobile usually charge per month. Now, the data is not equivalent, but the point is the cell phone industry is going through a parting of the Red Sea that is clear as all get out. That the 3 brand name cell phone providers, AT&T, Verizon, and T-Mobile, have been pushing their rates higher and higher and higher for people who need the comfort of that brand name. At the same time, other providers have been getting cheaper and cheaper and cheaper, and that's their claim to fame. I switched, was it last year or earlier this year? I switched to another provider, in my case, Google Fi, because I travel so much outside the country, and it is costing me much less than our prior T-Mobile service. And I've been very, very happy with the service with Google Fi, for someone who travels internationally. And then you've got, from the 3 brand name cell phone providers, all now have their own discount brands. And you're on the same networks, but at a far, far lower cost per month. Or you can go with the independents that buy the wholesale capacity. And in every case, when you compare apples to apples, the prices are far, far cheaper with the discounters owned by the big 3 and by the independents than they are when you have your service with any of the big 3. But as far as GoodToGo, I'd say the jury's still out because the customer reviews are so mixed on it at this time.
Brian in Texas says, I've been investing in real estate for over 20 years. I currently have 6 rental properties.
Good for you.
3 of which are fully paid off. I'm turning 50 this year, and while real estate has been good to me, I'm starting to see more and more difficulties. However, I'm curious if I ought to just sell my properties and take the money and put it into REITs that pay monthly dividends. Some of these REITs pay upwards of 15 to 20% yields monthly. No tenants to deal with, no toilets to fix, no insurance to navigate. Are these REITs risky?
A REIT's risky. They can be, but the 15 to 20% yields you're talking about is actually a partial return of principal that you're getting from a REIT. A real estate investment trust is what we're talking about. They tend to specialize in particular types of housing. Could be apartments, could be storage units, could be hotels. There are all different kinds of REITs. Shopping center REITs. If there's an area of real estate, there's a real estate investment trust that does it. It's a totally different kind of flavor. And if I were going to invest in REITs, which would be completely the opposite of what you've been doing with these 6 rental properties, I would invest in an index fund of REITs that gives you wide diversification. There are a variety of those. The lowest cost of all, of course, is from Vanguard. But you have taken these 6 rental properties and you've taken a lot of the pain out of managing them, screening the tenants, collecting rent and all, and accepted a little bit lower return on these 6 by having a management company. If you don't have a compelling case of what would be a better place to put the money, I would consider continuing with the process you're doing. I imagine having bought them over the last 20 years, buying individual properties over time, that you've got a very low cost basis in there and you're earning a nice cash flow from the 6 rentals. I used to own 6 investment properties myself. I'm down to 2 because what happens to a lot of us who own rental properties or investment properties is over time we get weary of dealing with them. And that's what I hear from your words more than anything else is, you've been there, you've done that. The fun is no more. You hired a management company because the hassles became too great. So if you want to cash out, great. But it should be because you're fatigued from doing it. You're not talking about whether or not they're sound financial investments. If you are fatigued and you want to stay in real estate, again, I love an index fund of REITs rather than you trying to select the right individual REIT.
Patel in Texas says, thank you for the advice on freezing our credit. I have a follow-up question. If I close a credit card, do I need to unfreeze or thaw my credit before doing so?
You do not. If you want to close an existing account, credit freeze has no impact on that at all. If you are going to close a credit card, though, know that it can affect your credit score depending on what it does to your ratios. The second most important factor in credit score is how much of a percent of your available credit you're using. You never want that above 30%. And if you want to have a rock solid, ultra high credit score, what's known as your utilization has to stay below 10%. So if you close this account, what's it going to do to the percent of available credit you're using in a month? If it's still going to be great, no issue, close that account.
Do you still use AutoSlash for car rentals? They seem to be only displaying Priceline deals. I have found better deals on Costco Travel. What's the arrangement between Priceline and AutoSlash?
So I don't know what kind of arrangement there is between Priceline and AutoSlash, but I don't use AutoSlash anymore. And it used to be a common tool I used because they would automatically rebook the rate when a lower rate came and stuff like that. And I just haven't found it to be effective in recent times. I thought they had a great idea. It worked really well for a good while. And now what I do is I go to rentalcars.com and I survey the market. And then I go to Costco Travel, and I'd say almost 100% of the time, I get my cheapest rental through Costco Travel. The other thing you get with Costco Travel is your spouse or one other driver is able to drive without an additional daily driver fee through Costco Travel. So it's been a really great source for Costco members to save a lot of money on rental cars.
MD in Alabama says, my son is a 6th grader and likes basketball. He wants me to buy him an NBA subscription, but I'm not a fan of subscriptions. What can I do to help him watch the games?
So locally, the NBA thing is a jumble, and they've never been able to put together something like NFL Sunday Ticket. Out-of-market games with NFL Sunday Ticket, you see every out-of-market game. Even if you were to spend the money you don't want to spend and buy the NBA League Pass, you'll only see some what are referred to as out-of-market games available because the NBA has done a multi-network deal with what we used to call cable channels, that you have to be a subscriber to YouTube TV or Sling or Fubo or any of the streaming services. If you already have them, your son will be able to see a lot of NBA games just being broadcasted on the various NBA outlets that are going to change again next season where those are. But League Pass is not terribly expensive. It's about $100 a year. And Krista, you're waving in front of my face. Explain our wonderful streaming TV tool.
We have a streaming tool on Clark.com where you can put in what channels you want, and I put in NBA TV, and then Clark has a list that it generated of what.
Yeah, so this is just one of the coolest things I believe we've done at Clark.com, where you can put in what's really important to you. And in order to get the NBA package, and again, it's bare bones NBA package, and get traditional, let's say cable TV kind of stuff, is from Sling, and it's $51 a month when you add in the NBA thing. But the NBA that you get with that is different than the League Pass that you can buy as just a standalone app. And that, as I recall, is a little over $100 for the season. But it's still only going to get your son some of the games. But if you do have a traditional streaming service, your son's just got to watch on there because he'll get plenty of NBA. And here's the poor man's way to watch. After a game has been played, you can see on YouTube for free the game highlights for games like you can for football, basketball, baseball, whatever. And you tend to get 10 or so minutes of highlights from a game. And your son would be able to watch the highlights of every NBA game being played after the game is over, like later that day, next day, and see it all for free.
I'm going to start with Peg in Wyoming's question. Do you want me to name this?
I don't know that there's a reason to. There are lots floating around out there right now like that organization.
Okay, so this company offers bonds $10 each, earn a fixed 7% APY with no fees, penalties, or minimum balance. Is it too good to be true?
Yes, and Peg, I am so thrilled with your question because I'm seeing so many of these offerings. They're not approved by any government authority. They are not FDIC insured. They're promising you the world. What's different in this case is what they're offering as an interest rate is lower than a lot of the others I've seen. But to get 7% in a world where you can easily pick up close to 5% that's fully FDIC insured, completely safe and all that, from just somebody's offer of a promissory note, which is what this fits under, is really dangerous. Let me tell you what a promissory note is. Hey, Krista, how would you like to earn 10% on your money?
Oh, yeah.
I promise I'm going to pay you 10% on your money.
Well, I believe you.
You shouldn't. So give me your money. And then I promise I'm going to pay you that 10%. But what happens if I don't? You have no recourse. These things keep rearing their ugly heads as they have my whole career in providing consumer advice. And this one is no different than any of the others. If you go read on this bond who it's insured by, who it's been vetted by, you will see, I guarantee you in the offering, it will tell you that there's no oversight whatsoever. So if you want to score big bucks in your life, you go offer people promissory notes, but they're crazy to buy them from you.
This question came in from Paul in North Carolina. Wells Fargo is getting pretty unfriendly with their new Zelle terms. Should Zelle be avoided at all costs? And I read through the terms. I don't know if you had a chance to glance. I
had already had somebody else say, what's going on here? This sounds really terrible. So I've looked at the Wells Fargo thing, and it didn't look different to me than how horrible Big Bad Zelle is with any issuer.
Because you have to mediate now. Is that always the case?
As best I know, that was always the case. Zelle is an abomination. It is a disaster for you. It is dangerous for you. Zelle was a react from the banks that are terrified of non-bank actors stealing market share from them. So Venmo, Cash App, PayPal have been such a source of fear for the banking industry. So a bunch of the big banks got together and they created this Frankenstein's monster called Zelle. By the way, I keep hearing from people that my beloved credit union are are embedding Zelle and activating it without permission from their members. Hope that's not really true. But Zelle embeds in your checking account. And if a criminal is able to get into that, they are able to steal money through the Zelle platform that is unrecoverable. And the banks and credit unions, as I shared with you recently about a big credit union in Michigan, are like, not our problem. I mean, you're the one who used Big Bad Zelle. I mean, why were you doing it? The problem is really simple. And it goes to the core of the problem of corruption in the Capitol, that the Congress has not done anything to put in place protections for consumers that use these payment apps. You know, the regulations never anticipated, and the laws never anticipated that there would be Big Bad Zelle or Venmo or Cash App. And it's the Wild West. And good for you that you read the terms. The best thing to do, deactivate Zelle. Never use it. Somebody wants to pay you by Zelle. The answer is thanks, but no. You got to pay me another way. Because, you know, if the banks actually cared about you, they would never have designed Zelle to be such a danger to your financial security, period.
Beverly in Georgia says, should I use my savings to buy a used car or finance through a bank? 5.2% interest loan for 4 years is what the bank's offering on $20,000.
Okay, so interesting question, Beverly. Cash is not going to earn as much moving forward as it has in the recent past because inflation now is really close to back to trend, which is the long-term desired trend is in the twos. And inflation, even though we were beaten up by inflation for a good while, we're back to trend line. So interest rates we can earn are going to be less than the 5.2 of the loan. So Beverly, if you have a decent amount of savings and you're not going to put your rainy day at risk by taking $20,000 from your savings and just paying cash for the vehicle, pay cash for the vehicle. The only reason you would take out a loan is if it would put you in a bad situation, if you had an oops, your whatever needed fixing or you needed medical or dental and you had a out of pocket you were going to have to pay and you didn't have the savings for it, then you would take out the loan. Otherwise, pay cash.
Stephanie in Indiana says, I'm confused and frustrated. I'm trying to pay off a home improvement loan. The interest rate is 9.99%. The loan is around $10,000. I've been making extra payments monthly, but they keep going toward future payments. The monthly amount due is $144. I've been trying to figure out how to get more toward the principal and less toward interest. Last month, I paid $100 at the beginning of the month, and 2 weeks later, paid another $100. When I saw the monthly statement, both payments went to interest only, nothing toward principal. Is this legal, and what am I able to do to get more towards principal?
So, Stephanie, this is a problem that I've read about with this particular bank that you're with. It is what's known as a super regional bank. They're not one of the four giant monsters, but they're a larger bank. Repeatedly, their system is set up either to be abusive or because they just don't have well-written software, that when you make an additional principal payment, they are treating it as prepaid on your loan instead of applying it to prepaid principal, prepayment of principal, which is costing you effectively a lot more on your loan than it should. So what I want you to do is I want you to go into one of the branches and you want to see if they can correct this for you and give you the back credit for the principal payment that would have reduced the interest this 10% loan has. If you get blown off at the branch, I want you to file a complaint against the bank, and they're well known to the regulators, at consumerfinance.gov. At Consumer Finance, it will trigger a process where the bank within 30 days will have to answer for itself. And what I find in a case like this where a bank isn't behaving right, they will say, well, as a one-time courtesy to the customer, we will credit it, and then you'll get what you were supposed to get in the first place. But this is a problem that is a known problem, and it's one that should be easily solved, except it is the bank's self-interest to not solve the problem with proper application of prepayment of principal, which is what it is that you're trying to do with the extra payments you're making, and the bank's not doing it.